You might have seen tweets like these two that I pulled as examples from social media in the last week saying what happens to GameStop's outstanding warrant count when 59 million warrants have been exercised, but people are still reporting warrants in their brokerages. And the other one says it's March 2026. GameStop is trading at $60. GameStop announces they've successfully raised $1.9 billion in exercised warrants. However, thousands of investors have unexercised and unsold warrants in their accounts. Boom! Evidence of fraudulent naked short selling. In this video, I'm going to break down very simply for you why both of these are just not going to happen. I'm sorry, it's really good for social media engagement, but it is not factual and, might take us a year to come back and circle back to this. But these two posts are from people who are dreaming, who don't understand normal market mechanics. And we can explain all of this with the basic theory taught in derivatives classes or corporate finance in college. It is called the no early exercise theorem. Let's get right into it. Thursday is wrapped up now. GameStop closed at $25.88, flirting around that 200 moving average on the daily chart. I'd like to see GameStop close above the 200 MA to end this week. We will see how tomorrow goes. I'm still bullish on the chart momentum between now and the derivatives deliverable date, October 7th. Let's cross fingers and hope that that upward momentum continues. It would be really cool to close this week above 25.93 if we can. In today's live stream, we talked about the no early exercise theorem. I'll put a link to it down in the video description in case you guys want to do your own due diligence. I urge you to always do so. This came up because of some of these social media posts that I see going on out there. They're meant to pump you up. They're not really based in any fact, and they're not going to happen the way that these guys are talking about it on social media. Let's talk about what is going to happen. And keep in mind, as we're talking about this, I have no idea how high GameStop's price could go. I have no idea about the volatility that we're going to see over the coming weeks or months in the warrants, or how high the prices on those could go. But the discussion about no early exercise is not any predictive discussion on pricing for stock or warrants. It is understanding how rational market participants are going to react when they're faced with the decision to exercise versus sell the warrants. And it doesn't matter what the price of the stock is. This is a basic concept that is taught in college. Every finance student, everybody on Wall Street is going to know this basic rule. And I'm going to tell you, not to be mean, but retail investors might be what we consider irrational investors. They don't know about the basics. They don't even often have the same motivations as somebody on Wall Street, an institutional investor, institutional holder of GameStop stock, an institutional holder of GameStop bonds, who might be what we call rational investors, people that are going to follow norms, finance math, finance rules, and their algorithms and their trading strategies are likely to be built around things like the no early exercise theorem. Therefore, if you want to understand how the next year is going to go, hey, I think this is something good for you to take a minute and just get exposed to it. Learn what it is. It's not any recommendation for you. It's not any prediction about the price, but it is prediction about how institutional investors are going to act and why you're not going to see a situation like described in the two tweets I put up for you at the beginning of this video, where GameStop puts out some announcement that 59 million warrants were exercised, and then thousands or hundreds of thousands of you still have warrants in your account. No, that is not going to happen. Let's dig into all of that in this video. I'm going to keep it short and sweet, and then encourage you to do a little more digging of your own. First of all, what is likely to happen? You could have some early exercises of warrants, and then you'll have some warrants that are exercised very close to the expiration date or even on the expiration date, which as of now we know to be October 30th, 2026. And then once the warrants have expired, then everybody who didn't exercise them, your warrants are going to be wiped out. They're going to be gone from your account. And then GameStop will issue a press release after the expiration date that they raised X amount of dollars if they were successful in raising money. There are some warrants issued by some companies where the company has the ability to pull forward the expiration date. Now, we have not seen the final warrant documents from GameStop yet. I don't know if there'll be an option for them to pull forward the expiration date. It doesn't matter for the purposes of today's discussion or the order of events. It's not going to change anything. There will be market participants following the no early exercise theorem that hold out till very close to the maturity date, and then the warrants will expire. And then anybody who did not exercise, your warrants will be canceled, and then GameStop will issue a press release. There's just not going to be a scenario where GameStop issues a press release and you still have warrants in your account. Let's go through the no early exercise theorem so you can understand why some people, some institutions are going to hold out to the very end. You might be asking yourself, Tony, how can you be so sure that someone is going to hold out to the very end to exercise their warrants? That is a great question to ask. And it's the same type of discussion we've been having for the last 6 months about the convertible bonds. It does not make sense for market participants to exercise early. The same theorem even applies to options. Now, when we're talking about the warrants, don't get me wrong, there are going to be people selling the warrants and capturing the profits. We are talking about exercising early. The dream that these people on social media have that 59 million warrants are all going to be exercised early, and GameStop will make some announcement while everybody else still has warrants in their account. That is not going to happen because there will be holdouts on exercising until the final expiration date. Then remaining warrants that are unexercised get canceled. GameStop issues the results. Let's go ahead and break this no early exercise theorem down into some language that is easy for you guys to understand. And I want to be clear, this is not instructions for you guys of how you should handle your trades. I'm trying to explain to you how institutional traders are going to be looking at these warrants. The theorem says that for American call options or warrants, it's the same basic logic. On a stock that does not pay dividends, it is never optimal to exercise the option or warrant early. Doesn't say on there that you can't sell it. We're talking about exercising early. Instead, the holder of the warrant should sell the warrant on the secondary market, which is possible with GameStop's warrants. And the other option would be hold the warrant until expiration. And then if it is in the money above the exercise price, then exercise it very close to the expiration date. Why does that theorem exist? Because the warrant always has a time value component added to the price, added to the value of the warrant that exceeds the intrinsic value, the stock price minus the exercise price. And if you choose to exercise that warrant early, you're choosing to give up or forego any of that time value that remains built into the price of the warrant. Institutions are not likely to make that decision to just, I want the shares, bro, and forget about the extra time value. Even if it's $5 a share, we don't want it. Institutions don't think irrationally like that. It's not logical to think that institutions are going to exercise early. If anything, if they think that the thing is topped out, they might just sell the warrant and capture both the intrinsic value and the time value, selling the warrant instead of exercising. They'll sell the warrant to someone else and let them take the risk of what happens next. If you really dive into this topic and you really want to get deeply educated on it, you'll find that there are certain frictions which may exist from time to time for certain market participants where it might make sense for some of them to exercise early. But in general, those are very rare exceptions, and it almost always makes more sense to just sell the warrant rather than exercise early. unless you're talking about very close to that expiration date, because the time value of the warrant is approaching zero. Then it doesn't really matter which choice you make, exercise or sell the warrant. I know there are a lot of retail investors that are anxious to get these shares, to hand over their $32 to GameStop, and they don't care if they're foregoing $5 of time value. For them, profit is not the main motivation. And that is fine if that is the choice that you make. It is my belief that institutional traders, bondholders, and stockholders, all of which are going to have warrants, are not going to act irrationally like that. Therefore, at least some portion of these warrants are going to remain active until very close to the expiration date. And then after the expiration date, whatever was not exercised by anybody, retail or institutions, will be canceled. And then GameStop will issue a press release letting us know the total money that they raised. Over the next year, we could get quarterly updates if the price runs up, and some people are exercising early. I am certain some people will exercise early, maybe you. A lot of retail traders seem highly motivated to exercise early and forego the time value by instead just selling the warrant. That's their choice. That's fine if they want to do that. The other thing that is interesting to note on these warrants, with the time to expiration being greater than 12 months, Ryan Cohen and GameStop picked October 7th for the distribution date, but October 30th for the expiration date. And I find that interesting because that gives anybody who holds until the very end 23 days to be in long-term gain status with whatever they decide to do with these warrants. And I think that is another nod to the fact that GameStop understands that many market participants will be likely to hold these all the way to the end. And this gives them a nice little extra thank you. Instead of short-term capital gains, they have long-term capital gains because the warrants will at some point be greater than 12 months old after October 7th, 2026. Anyways, if you want to learn more about this, go do some digging and let me know if you guys have any questions about the no early exercise theorem, and let's have a discussion. This video is to generate discussion, get you thinking, hopefully teach you a little bit. It is by no means any instructions for you. You're going to do whatever you want anyways. I would like you to understand how I believe institutional traders are looking at this. Thank you for watching all the way through. I am Tony DeNaro, and I will see you on the next video.